Good afternoon, everyone. Thanks for joining me on this here Monday. um, we're here today to talk about the recently published Notice 2022-53, where the IRS said they are waiving the excise tax for certain RMDs that were not taken for 2021 and might not be taken for 2022. And, at first it seems simple enough, but it really isn't, because a lot of questions came out as a result of that notice. A lot of questions came from consumers and professionals as well. And the first one I want to address today is that this is a waiver of the excise tax. It's not a waiver of the RMD. What does that really mean? It means that these amounts are still RMDs. Sure, they don't have to be taken by those two specific classes of beneficiary, but they're still RMDs, and that will affect transactions such as if amounts are being rolled over from a 401k to a beneficiary IRA, then those amounts cannot be included in the rollover, and that's because RMDs cannot be rolled over. So that's the first thing I wanted to establish, that this is a waiver of the excise tax, not a waiver of RMDs. And as usual, as we go along, please send me your questions and I will answer them. So the objective here today is to identify the narrowly defined class of beneficiaries who qualify for this waiver. Because if you've been reading some of the articles that are out there, you'll see that some people are saying IRS waived the excise tax for everyone. It's a blanket waiver, and it's really not. So when the client comes in to see you and asks you, am I eligible for this waiver? The challenge for us then is to identify or determine if that client falls into the two category of beneficiaries that qualify for the waiver. And part of that is to determine if the client is a regular designated beneficiary or a successor beneficiary. And if they're a regular designated beneficiary or successor beneficiary, were they subject to the 10-year rule and also required to take annual RMDs? Because only then would they qualify for the waiver. As usual, when we talk about beneficiary options, I like to include a reminder that explanations of what the options that are available when the account owner dies before the required beginning date versus on or after the required beginning date. For a Roth IRA, there's no RMDs for the Roth IRA owner, and therefore no required beginning date. So it doesn't matter at what age the Roth IRA owner dies, the beneficiary is subject to the same rules that apply when the traditional IRA owner dies before the required beginning date. And that means for Roth IRAs, a beneficiary of a Roth IRA would qualify for the waiver of this excise tax only if the beneficiary is a successor beneficiary of a Roth IRA beneficiary that was taking distributions over their life expectancy. So this all starts with the Secure Act, right, which was signed into law on December 20th, 2019. And part of the provision of the Secure Act was that it introduced a new 10-year rule. And under that 10-year rule, the language in the Secure Act says distributions are optional for the first 9 years, but the account has to be fully distributed by the end of the year 10. And if you look at the tax code right now, the tax code mirrors the language of the Secure Act and pretty much said, remember that old 5-year rule that applied when the account owner died before the required beginning date, and under which distributions were optional from years 1 through 4, but the account has to be fully distributed by the end of year 10. Well, the 10-year rule is the same thing, except that instead of 5 years, we now have 10 years. So reasonably, everyone, including myself, we're telling individuals, listen, if you are subject to the 10-year rule, then distributions are optional from years 1 through 9, as long as you distribute the account by the end of year 10. Then the proposed regulations were issued earlier this year, 2022, February 24th to be exact. And the proposed regulation is the IRS and the Treasury's interpretation of the Secure Act. So we're supposed to really take that as gospel, unless the final regulation says otherwise. And learned minds, attorneys, etc., who practices in this area are of a general agreement that that is not going to change. What am I talking about? The proposed regulation says if a beneficiary is a regular designated beneficiary, it is true that they're subject to the 10-year rule. It's also true that if the account owner died before the required beginning date, distributions are optional from years 1 through 9. However, if the account owner died on or after the required beginning date, then there is an old rule called the at least as rapidly rule that says once an IRA owner has already started taking RMDs, when that IRA owner dies, the beneficiary must take distributions at a rate that is at least as rapidly as the rate that the decedent was taking RMDs. Now we know that the at least as rapidly, they really could have used a better term, because the IRA owner would have been using the uniform lifetime table or the joint life expectancy table if the spouse was a surviving spouse, if the beneficiary was a surviving spouse and the spouse was a sole primary beneficiary and more than 10 years younger. But the beneficiary would be using the single life expectancy, which on an age for age basis would mean that the RMD would be much more than the RMD that was taken by the beneficiary. So it's really not at least as rapidly, but the bottom line for us is that the beneficiary uses the single life expectancy to calculate the beneficiary's RMD. Now, surprisingly, I got the question of, well, really, what is an RMD? And at first I was thinking, well, it's a simple question, right? But as I had an extended conversation with the person who asked, he explained something, and something that we have always known, because I talk about that in my webinar. When people have conversations about RMDs, they tend to focus on the retirement account owner and forget that beneficiaries too are subject to required minimum distributions. And as a result, beneficiaries who inherit retirement accounts and do not take RMDs will be subject to the 50% excise tax that applies to RMD shortfall. Now, let's assume that a client comes in to see you today and they ask you, am I subject to the at least as rapidly rule? Now, before the proposed regulations were published, I would have said, let's find out first if that person is a designated beneficiary. Because if they are a designated beneficiary, and if they are a designated beneficiary, then they're subject to the 10-year rule. And it doesn't matter if the account owner died before the required beginning date or not, because that's what the Secure Act said. And that's what the current version of the tax code said. If you're a designated beneficiary, you're subject to the 10-year rule, and distributions are optional from years 1 through 9. But part of what came out of the proposed regulations is, hang on a second, when a beneficiary comes in to see you and ask you what their distribution options are, you have to find out whether or not the account owner died before the required beginning date, right? And this applies to all beneficiaries. So contrary to what the language in the Secure Act suggested, we still need to determine if a designated beneficiary and any other designated beneficiary died before the required beginning date, because that makes a difference as to what the distribution options are. So let's take a look at this high-level explanation of what the distribution options are for the different types of beneficiaries. And you're going to get a copy of this, and you can always use my stuff in any way you see fit. So if the IRA owner died before 2020, yes, we still need to know that. Why do we still need to know that? Especially for the purpose of what we're talking about here today, because one of these beneficiaries, one of these beneficiaries, their beneficiaries are eligible for this waiver of the 50% excise tax. So if the account owner died before 2020 and died before the required beginning date, the beneficiaries have the 5-year rule. We don't need to be concerned with that. They don't qualify for the waiver. The beneficiary could also be subject to the life expectancy rule, which is one of the options that are available to a designated beneficiary. Now, this designated beneficiary here, where the account owner died before 2020 and died before the required beginning date, the beneficiary is a designated beneficiary that's taking distributions under their life expectancy. We need to keep track of that designated beneficiary. Why is that? Because if that designated beneficiary who is taking distributions over their life expectancy dies after 2019, then their successor beneficiary is subject to a 10-year rule. And that successor beneficiary is one of the two parties that qualify for the waiver of the 50% excise tax. If the account owner dies on or after the required beginning date, distributions are taken over the longer of the remaining life expectancy of the decedent or the life expectancy of the beneficiary. This beneficiary too, if that beneficiary dies after 2019, their successor beneficiary would be subject to a 10-year rule and therefore qualify for the waiver. Now, the other beneficiaries for pre-2020 don't qualify for the waiver, and that would be a non-designated beneficiary or a designated beneficiary subject to the 5-year rule. Now, let's move on to where the owner dies after 2019. And the distribution options are, if it's a designated beneficiary, it's a straight 10-year rule. That's my term. And it means that distributions are optional from years 1 through 9. The account has to be fully distributed by the end of year 10. Does this person qualify for the waiver? No, because they don't have any RMDs for the first 9 years. Their RMD is really whatever balance remains at the end of the 10-year period. So if they didn't take any RMDs in 2021 or 2022, or if they didn't take any distributions, I should say, because you're not RMDs, no big deal. But if you move across to where this designated beneficiary is a beneficiary of someone who died on or after the required beginning date, then they still have the 10-year rule that apply, but they also have the annual RMD requirement where distributions must be taken every year over the beneficiary's life expectancy, beginning by December 31st of the year following the year of death. Now, these were the people that all of us was telling, and notice I say us because I'm included. These are the people that all of us were saying, well, you're a designated beneficiary, you don't need to take annual RMDs. And the proposed regulation says that's not true because the at least as rapidly rule applies. right? So now we have people who are supposed to take annual RMDs and they didn't take it for 2021 and 2022 because we told them that they didn't have to. No, the proposed regulations are saying we were wrong. Moving on to the next row, where we have an eligible designated beneficiary. If the account owner died before the required beginning date. Now remember, an eligible designated beneficiary have two options, right? They can use the straight 10-year rule, or they can take distributions over their life expectancy. This eligible designated beneficiary is not eligible for the waiver. Why is that? Because it was clear from the get-go that if they chose the life expectancy option, they were required to start taking annual RMDs by December 31st of the year following the year of death. And if they chose a 10-year rule, there's no RMDs until the end of year 10. Non-designated beneficiary, straight 5-year rule, they're not even part of this conversation. Now, for an eligible designated beneficiary, if the account owner died on or after the required beginning date, there is some sort of trifecta that's going on here, where the eligible designated beneficiary takes distribution over their life expectancy. The life expectancy would be the longer of the remaining life expectancy of the decedent or the life expectancy of the beneficiary. However, if the eligible designated beneficiary dies before the end of the life expectancy period, then it gets switched to a 10-year rule, where that 10-year rule applies to the successor beneficiary, not the eligible designated beneficiary. And it's the successor beneficiary who is subject to the 10-year rule that qualifies for the waiver. The beneficiaries are non-designated beneficiary, then distributions are taken over the decedent's remaining life expectancy. So the high level is only beneficiaries who are subject to the 10-year rule and the life expectancy rule are eligible for the waiver. And who are those? The designated beneficiary, where the account owner died after 2019 and also on or after the required beginning date. Or the beneficiary of the eligible designated beneficiary, where the eligible designated beneficiary was taking distributions over their life expectancy and died before that life expectancy period expired. Now, there's a class of beneficiary that is added to the mix. When we look at a designated beneficiary under the old rules, where the account owner died before 2020, and the designated beneficiary was taking distributions over their life expectancy, and they died after 2019, they are treated like the new Secure Act eligible designated beneficiary, which means when that designated beneficiary dies, their successor beneficiary is subject to the 10-year rule. So the map that we have to draw is, well, who then is eligible for the waiver? And part of what we have to do is, you know, as I was putting this together, I said to myself, it's unreasonable to expect you guys to be able to track this. And so what I'm going to have to do is put together a map of sort of like a flow chart, where you ask your client certain questions that lead you to the answer of determining if they fall into one of the only two categories of beneficiaries that qualify for the waiver, who are designated beneficiaries that inherited an IRA from someone who died on or after the required beginning date and died after 2019, and successor beneficiaries where the original primary beneficiary was subject to the life expectancy method and died after 2019. where the beneficiaries are required to continue taking life expectancy distribution. So this would be like the old stretch, except that the stretch ends 10 years after the death of the original primary beneficiary. So the question becomes, well, what is the end result here? Let's say we have identified who are eligible for this waiver. Are they supposed to do anything? So far, the IRS have not indicated if they need to take any particular action. The IRS just says, if you fall into one of those two categories and you didn't take your 2021 or 2022 RMD, no big deal. There's no 50% excise tax. But what if you are one of those beneficiaries who realized that you should have and didn't, and so you filed Form 5329 and paid the excise tax? And the IRS says, all you got to do is ask for a refund and they'll send you your money back because you're not subject to the excise tax. One of the questions that came up is, well, so we know that the IRS is not going to apply the excise tax for 2021 or 2022, but they're not saying that these amounts are not RMDs. Does it mean then that come 2023, these individuals have to go back and play catch up and take those amounts? No, they don't, because remember, the process of asking for a waiver of the excise tax involves going back and playing catch up to take the RMDs that were missed, because you can't ask for the waiver unless you show the IRS proof that the missed RMD has been taken or steps are being taken to remedy the RMD shortfall, and that's not necessary in this case. It will eventually come out in the wash by the end of the 10-year period, or earlier if the life expectancy ends earlier, but there's no requirement that come 2023 that they have to play catch up. If your client has assets in a 401k or employer type plan, and they inherit that account, and they're subject and they qualify for this waiver of the excise tax. Now, we're going to have to make sure that any amount that client rolls over, because some of these beneficiaries do roll over these amounts to inherited IRAs for different reasons. We got to make sure that the 2021 and 2022 RMD amounts for the two qualifying beneficiaries are not included in the rollover. Now, it is possible that that might change, but at this juncture, the IRS have not said that these amounts are not RMDs. Now, when you compare this with the CARES Act of 2020, the IRS came out and said, there's no RMD for 2020. And what that meant was the amounts were eligible to be put back into the retirement account if they were already taken. But this is different. They're not saying that there's no RMD. They're just saying if you didn't take it, then we won't apply the 50% excise tax. One of the very good questions that came up too is, well, let's say someone died in 2020 and we know there's no excise tax for 2021 or 2022. When they're taking it in 2023, how do we determine the life expectancy that is used? Do we start new, or do we have to go back to 2021, which is usually the first year that we determine the life expectancy that is used to calculate the RMD and subtract one for each year? You have to go back to the first year, because remember, the only change here that happens is that the excise tax is waived, right? So when you're calculating the RMD for 2023, if the person died in 2020, you have to go back to 2021, figure out the life expectancy, subtract one for each subsequent year until you get to 2023 to determine the life expectancy. Now, even when RMDs were waived under the CARES Act for 2020, those rules were the same. The waiver of the RMD did not change the calculation method for 2021 going forward. Right, so those were some of the very great questions that came out of this notice. So I hope that answers your question. I hope you have some more for me. I sent out a sample letter that you can use to share with your client. If you look at the letter and there are things that you want to have included that wasn't, but you want to have it included because you think your client want to know certain questions, just let me know and I'll modify that letter for you. And if there's anything else that you need that you think I can help you with, you know, I'm always here for you. And I look forward to your questions. Now, that's it, short and sweet. Let me know if you, let me see, questions. Are the waiver forms going to be required to be filed for Miss RMDs? I like your map flow chart idea too. Thank you. I don't know if the waiver forms are going to be required. I don't think so, because this usually you file the form to either pay the penalty or request a waiver of the penalty, right? And since none of these apply, then I don't think that there's any need to file the form. Now, another question I was thinking of though, if someone already paid the penalty, how do they get a refund? And I found out that there's a special form that tax preparers use to request a refund. It's all part of the tax filing process and it's not form 5329. So at this point, unless the IRS says otherwise, then you don't need to file form 5329 because there's no reason to, right? Because you only file it when you're addressing the excise tax. And for these particular individuals, we don't need to. Are we actively waiting for the IRS to issue final regulations regarding the subject matter for 2023? Yes. Part of what the IRS said in Notice 2022-53 is that they plan to issue final regulations soon. But you know, they didn't say when. They hope to do it soon. It's anyone's guess as to when that would be. We're hoping for early next year. Some people who have an inside track is saying by the end of this year, but I mean, it's almost December, so who knows? What do you think will be the waiver rule for 2023 and beyond? When could we know this by, do you think? I think for 2023, the IRS is saying in Notice 2022-53, this is giving you an opportunity to wipe the slate clean for those individuals who are subject to the 10-year rule and didn't realize that they had to take annual RMDs if the account owner died on or after the required beginning date, or if they were a successor beneficiary, where the successor beneficiary is subject to the 10-year rule. So I think Notice 2022-53 is saying, here, this is information that you need, you should be good going forward. But we should also think about why they felt the need to issue that notice in the first place. Is because when they published the proposed regulations, people went after them with a vengeance, and there were a lot of complaints and, you know, even worse. So they had to respond. Will they extend it? I think it depends on how much pressure they get from the public. There's no avenue now to give feedback on the proposed regulations because the comment period closed in June. But you know, there are other ways to reach the IRS. But for us here now, the question becomes, how do we make sure that the clients that we work with are aware of their obligations going forward? Now, the letter that I sent out today it just explains who qualifies for the waiver. But I think we really need to break it down for consumers. I mean, they don't even know what's it. You're telling me a designated beneficiary doesn't qualify? I'm sorry, you're telling me that a certain designated beneficiary is qualified, but no, you're telling me that an eligible designated beneficiary doesn't qualify. They don't understand the two. the difference between the two, right? So part of what we have to do is help beneficiaries be able to determine which class of beneficiary they fall into and what their distribution obligations are when it comes to RMDs. These are some great questions. If a client would be better off in their specific tax situation 2022 versus 2023 to not take RMDs in 2022, can we advise them not to take the RMD since there's no penalty? Absolutely, because what's the consequences of not taking the RMD? The 50% excise tax, right? But it's waived only for those beneficiaries. No, you got to make sure though that when you tell a client that, you got to make sure that that client falls into one of those two categories. Because if they're an eligible designated beneficiary, for instance, and they're taking distributions over their life expectancy, they don't qualify for the waiver. So before we tell a client that, we have to make sure that they fall into that narrowly defined category. Should we maybe just prepare the corresponding clients for beneficiaries RMD in 2020 through 2023 and beyond, and maybe then we could stop if not required? You know, when the IRS issued the proposed regulations earlier this year, I got the same question about 2022 RMDs, and my response to then was, why don't you wait until October? Because by then the IRS will say if you have to take it or not. So it's like, you know, I was some psychic Jamaican, maybe I am. So my guess on this one was right. For 2023, you could do the same thing, wait until as close to the end of the year as possible, you know, October again, and see if the IRS is going to probably waive it for everybody instead of just this two category of people, or extend the waiver for this two category of people. So waiting until close to the end of the year is not a bad idea, because then you don't have to try to put it back in or saying, oops, my client take it when it would have been better for them not to take it for tax planning and other purposes. You know, what one I was saying to an advisor, that it makes sense to take the annual RMDs anyway, because if you inherit $1 million, do you want to wait until the end of the 10-year period to take it if it's a traditional IRA, when it's all going to be included in income? And she said to me, well, from a tax perspective, it might not be a good idea to do that, but remember, there are some people who are in different tax brackets for different years, so it makes sense to take some then or take none now. And she also mentioned like Medicare and et cetera, where distributions might affect eligibility for that sort of thing. So, you know, it's a whole package deal, not just RMDs when we talk about should a client take distributions or not. If the excise tax is waived, does that mean that clients do not need to take 2021 or 2022 RMDs at all? Or is the IRS still requiring these be taken with no penalty? Since the excise tax is waived for 2021 and 2022 RMDs, only for those two categories of beneficiary, we always want to remember that, then they do not have to be taken. So if your client is a designated beneficiary where the IRA owner died on or after the required beginning date, then they do not have to take RMDs for 2021 and 2022. If your client is a successor beneficiary where the original beneficiary was taking distributions over their life expectancy and died, so now the successor beneficiary has 10 years to distribute those assets and is required to continue taking annual RMDs, well, that two category of beneficiary does not have to take those RMDs. So no, they're not required to be taken. They can just leave them there if they want to. Can one put the 2021, 2022 RMD that would be eligible for waiver, can they put the money back now? As of this time, no. Why is that? because those are still classified as RMDs, and RMDs cannot be rolled over, right? So if they took it, fine, they have to keep it out. They cannot put it back. Not at this time anyway, unless the IRS issued further guidance that said they could. I saw a bill that came out in May where it shows that the IRS has been talking about this. And part of what Congress has been talking about this, and part of what they were proposing was to make these amounts eligible for rollover, but that got stuck at gate one. No action has been taken since May. So as of now, if clients took those amounts already, they cannot put it back because RMDs are not eligible for rollover. Those were some great questions. Any more questions? Well, you know, I'm here, always happy to answer your questions. And my policy is there is no such thing as too many questions. If you need to ask me the same question 10 times a day, I welcome it, because sometimes you never know, there's one little thing that changes the answer, right? So please don't hesitate to send me your question as often as you need to. They make me happy, so happy to answer those. So please send them to me. If there are no more questions, I am so appreciative of you guys' time. Thank you, and enjoy the rest of your day.